Hello and welcome to Hot Topic. I'm Hugh Richards. 7 or 8 years ago, the international banking system collapsed, and we've all been feeling it ever since. Now, as we see signs of recovery, we are offered a variety of political attitudes to debt, deficit, austerity and spending. Who better to explain money than a banker? So I'm glad to say I'm joined now by Anthony Wynne, manager of the Humberside branch of Swedish bank Handelsbanken and chairman of the North East Lincolnshire Chamber of Commerce. Anthony, thank you so much for coming in.
A pleasure here.
Did I pronounce the name of your bank correctly?
You did.
Thank you very much.
You did well. Handelsbanken.
Will you just become a little bit historical and take us back to 2007, 2008?
Yes, of course.
What happened? What was that collapse?
In simple terms, banks ran out of money. We saw it with Northern Rock, with people queuing up to get cash out of the bank because it all stemmed from loss of confidence in the banking system. The banks were under pressure. Their capital positions were stretched, to say the least. And of course, they were writing off huge sums that had been invested in very risky assets that were part of the liquidity, theoretically, of the banks. But that cash wasn't good. So hence they needed bailouts, they needed help from governments, and they needed to put cash back into their systems to restore confidence with the general public that they weren't going to go bust and they weren't going to lose the money.
You're the closest banker to me, but I'm not going to blame you personally for it.
No, we're a good bank.
Whose fault was it?
The banks, because as I said earlier, they put money into risky areas, and their lending books were under pressure, taking bad risks and investing in areas that really they should have stayed out of. Subprime markets, high returns, theoretically high returns, but very, very risky. And of course, that turned out to be the case.
And is this something that blew over to us from Wall Street? Because I think the precipitator of the crisis was the collapse of Lehman Brothers, wasn't it?
Yeah, Lehman Brothers was at the start of the process, but really that was just indicative of banks worldwide. Not all banks, I have to say, but that really sort of made banks look at their assets. It made central banks look at the banks in their countries, questioning the strength of their liquidity ratios and looking at the assets of those banks and where they were invested and the risky areas. Then they started writing debts off. So, of course, then the liquidity ratios came under pressure. The general public were losing confidence, and we saw the Northern Rock situations with people queuing up to get the cash out effectively. So yes, Lehman was the start of the process, but there were many, many other banks that were in the same sort of situation to varying degrees.
My legal training leads me to ask cui bono, who does it benefit? Who came out well out of this? Who got something out of it?
Nobody. Because you need a very sound, strong banking system to support the national finances of all the countries. So the stark answer to that is nobody came out of it well at all.
Well, this is where I must reveal my ignorance of economics, but there was money in 2006 and a fair amount of it, and then suddenly there was much less money in 2009. Now that money didn't shift from one place to another, it just stopped existing, did it?
It became valueless. I mean, the investments that a lot of the banks had made in areas that really weren't worth what they were thought to be worth. And then it becomes a downward spiral. A lot of the problem arose in America with property prices that fell and fell and fell. And a lot of banks had got money lent out into those markets, and values of properties plummeted. So, of course, that meant irrecoverable debts. And when lenders have billions out, say, in the property market, and the values are falling drastically, money is lost. So, yes, it was there one day, but it actually wasn't there.
Why is it that the governments of the United States, the UK, other governments around the world bailed out these banks to the tunes of billions and trillions of pounds and dollars, why did the government side, as the taxpayer, why did we bail out the banks? Why couldn't we just let them fail?
If you imagine a system where the banks are allowed to fail, everybody needs banks. Everybody has money deposited with banks. Businesses have money in banks. Individuals have their life savings in banks. And the banking network's also needed for transmission of payments. The whole financial world would have ground to a halt if the banks fail. Everything stops. People have lost the money. Businesses have lost the money. No sources of lending are left for businesses to create jobs and wealth. Nobody can buy properties because they can't get mortgages. You have to have a sound financial system. So in terms of supporting the banks, there was really no question it had to happen.
As Adam Smith would tell us, and no doubt economists since then as well, money is really just a way of counting value. It's a way of holding and measuring value. Now, since 2008 and the banking collapse, there hasn't been less work done, less skill used, fewer raw materials employed. There hasn't been less corn grown in the fields. There hasn't been less coal hewn from the rock. The actual value that money represents as a way of counting, that's still there. That hasn't diminished at all.
Well, it has really, because we've been through years of recession. Industrial output fell drastically. Wealth levels fell. Wages in real terms fell. Companies' fortunes dropped dramatically. So actually, you could argue that the downturn did cause the value as such of money to fall. There was less around, there was less earned, and so we've had tough times.
Well, forgive me, let me take the most simple model. If we say I have a lump of coal, a lump of coal is worth a lump of coal. It's worth so many hours heat in a fireplace. It takes so much effort to get out of it. Now, if the value of money changes, the value of the lump of coal doesn't. And if one of those values changes, the value of money, then surely the lump of coal, it's not that the lump of coal is worth no longer £5 but only £1. It's that £1 is now worth a lump of coal rather than 5 lumps of coal. So it's the money is the artificial change in its value. It's not what money can buy.
Yeah, the value of money does change, and that reflects on commodity prices, whether it be coal, oil, or whatever. And of course, it's all demand and supply. And in recessionary times, the demand for products reduces, and so production falls. So whilst the value of something might be the same, if the amount that's been produced of that something has fallen, there's less money moving around in the system.
It's the velocity of the money moving rather than the amount of it, as it were, that defines the success of the economy.
Yeah.
7 years ago, 7 or 8 years ago now, the banking collapse.
Yeah, that's right.
And we're still feeling the pinch.
We are.
Why has it taken so long? Because other recessions, I mean, usually there's a 7-year cycle. You get a recession for a bit at the end of every 7 years. Why has this recession lasted the whole 7 years?
This recession really came about because of the huge liquidity problems within the banking system, which wasn't really the case in previous recessions. And you need, as I said earlier, a healthy banking system to oil the wheels of the economy. So it's taken the banks years and years to recover, and you could argue that not all of them have recovered as yet. And so that's why it's taken so long. And of course, also the huge amount that central banks and governments have had to plough into the banking system has, of course, affected the economies of the countries involved. So, you know, that's why it's taken a long time.
It is a normal circumstance, recession or no recession, crisis or no crisis, that banks will lend more than they hold.
Correct.
Now, again, either I'm very ignorant or your industry is nefarious and wicked. But banks can need to hold only 5% of the money they lend. So they can put out lends, 5.5% I think is the American guide. They can lend 20 times as much money as they actually have. Now, to my small, tiny mind, that seems bonkers.
Not really, because if you only restricted banks to lend the amount that they're taking in deposits, that doesn't create any cash going into the monetary system. So you would really be struggling to lend to businesses, lend for people to get mortgages, but you do have to have an element of control. And liquidity ratios actually are higher than that across Europe now. But you do, or there is an expectation that the banks hold an amount of reserves that can be turned into cash. And of course, obviously, they do hold deposits. But if they couldn't lend beyond the actual cash that they've taken in, the system wouldn't work.
Well, what would, if I deposit £100 at your bank, then you have £100 to lend to somebody. Is that not enough? Would that not be a sound way of having an economy, or am I being medieval?
I think you're being very simplistic here. Yes, I mean, if you just lent the amount that you took in, there just wouldn't be enough to go around, quite honestly, because the banking system creates wealth, it oils the economy, it gives businesses cash flow, gives individuals the ability to borrow money. And if you were restricted to purely the amount that you took in on deposit, yes, you'd be a very safe bank, but you really wouldn't be able to put money into the economy.
So in a way,
but there is, there are safeguards there. The liquidity ratios, the amount held in cash, and deposits that are viewed as liquid have gone up a lot since they've needed to go up since the banking crisis, and the banks now are getting into a stronger place.
Effectively, banks become money factories.
Well, they've always have been to an extent, yeah.
We'll come back to that, Anthony. Thank you very much. Must break there for a moment. Please rejoin us after this break. Welcome back to Hot Topic. I've been talking to Anthony Wynne, manager of the Grimsby branch of the Swedish bank Handelsbanken and chairman of the North East Lincolnshire Chamber of Commerce. And we are talking about money, Anthony.
We are.
I feel much better informed than I was a few minutes ago, but can I just continue to get better informed?
Yeah, of course you can.
Banks make money by deposits coming in on which they pay interest to the depositors, and they charge a slightly higher rate of interest when they lend money, so that the money that they've got coming in interest paid to them is slightly greater than the money that they've got going out in interest they pay to their depositors. Is that fair?
Not quite. Banks make money from the margin over base rate that they charge to customers on lending. And on deposits, banks make money out of the difference between the income they can get on those funds, whether it's from own lending or depositing elsewhere, and the amount of interest that's paid out to a customer. So close.
Okay.
Close.
All right. I'm going to be applying for a job a little later. We have at the moment a 0.5% interest rate, base rate, Bank of England interest rate.
Bank of England base rate, yeah.
And we've had that for 6 years now.
Yep.
It's a record low. It's never been this low since they invented money. And yet, as you say, you have to charge a little bit more when you're lending to businesses.
Correct.
Around Humberside, because that's how you make your money. So you pay a little bit more, charge a little bit more than 0.5%. But there are several banks. There's a market in banks. We could all go to another bank which will charge us a lower interest rate. So why is it that the interest rates banks are charging are quite a lot higher than 0.5%?
Because the cost of funds, whether it's 0.5% or whatever, is the cost of that funding to the bank. But you've got other issues that come into play. It's quite a complex formula, actually, in terms of how much the customer actually pays. Because apart from there is a profit element to the bank, there are costs that the bank have to cover, and one of them is there is a cost to maintain its level of capital adequacy that we spoke about earlier, the amount of capital that banks have to hold, and a portion
more than 5.5% of what you're lending.
Yeah, and a portion of that has to be accounted for in the margin that a customer pays. So it's not all profit, the element that's over the base rate lending. There are other factors, but of course, from that margin, the bank has to make some profit to be able to run its operation.
So if I were running a business, I wanted to buy a new piece of kit that costs about £1 million, and it's a sound business. You've seen my books. I've got a good business plan. What sort of rate am I paying on £1 million over 5 years or 10 years?
It's a really, really difficult question to answer, because what a bank will factor in on the amount that a customer borrows is influenced by the strength of the customer, the asset that is being financed, the deposit that the customer's putting in. Effectively, the bigger the deposit, the better the interest margin they might expect. And there is a lot of other factors as well about what that asset is, how good is it as security. If it's property, it's better security than if it was a piece of plant or equipment that was being utilised in a factory. And so it's actually an impossible question to answer because you need all the facts and figures and
at least
and,
it was
and
an informative non-answer. Anyway, but
it's impossible to answer.
Would you say that businesses are finding it more easy or more difficult now to get financing, to get debt financing from banks than they were, say, 5 or 7 years ago?
It's getting easier, but it's still not very easy. If you'd have asked me that question 2 or 3 years ago, I would have said it's very difficult. But as banks are coming out of the problems that they've had, as there is more cash in the banking system, then lending to customers is becoming easier. And it's easier than it was maybe 2 or 3 years ago, but not as easy as it was 7 or 8 years ago. That's not necessarily a bad thing, because the banks are more risk-focused now. They're looking at the safety of lending and the customer's repayment capacity. And so there is certainly more care in terms of looking to lend and the quality of the customer that's borrowing. And that's right, and that's got to be right, because look at the problems that we had 7, 8 years ago.
There's a little bit of a contradiction in what the banks are being asked to do by governments, by states, in that you're being told to increase your assets or your capital reserves at the same time as you're being told to lend more. Now, you can't sort of keep more money in your vaults, as it were, or wherever you keep it, and lend it out at the same time. So you're being asked to do 2 contradictory things here, aren't you?
Yeah, absolutely correct. I mean, that's more of an issue for some banks rather than others. My bank are in a great position. We haven't got that challenge. I would say that, but we are very, very strongly capitalised, so we don't have that issue. But for banks that have had issues and their capital positions are weak, yes, absolutely, that is a challenge, because they're encouraged to lend to help the economy. So there is pressure there, governmental pressure, central bank pressure to lend, but their capital positions are still not healthy. And how do you get a stronger capital position? Several ways. Take more deposits. Interest rates are low. Does that attract deposits? Difficult. They also need to hold back an element of cash, as I said, from lending margins, etc., to go into their capital position. So, yes, that is a real challenge, to lend more whilst trying to build up your capital position. So, yes, it's a tough call for some of the banks.
You can have a little bit of sympathy for that, but I think you'll agree that bankers are regarded with something verging on scorn generally, especially since the crisis of 2008. But not just that, there's also been the LIBOR scandal, and there's been HSBC recently revealed to be helping people to escape taxation that they should be paying. The bankers are absolute scoundrels, aren't you?
No. We're very nice people, actually.
Well, I'm sure you're
in the main.
I'm sure you're very nice
we
people.
don't influence what happens at the top. But again,
there is a culture of some dodgy practices.
It hasn't done a great deal to give bankers a good name, what's happened in the last few years. But I've got to say that we're talking individuals in very senior positions. The bankers on the ground that are out there helping the local economy are genuine, good people who want to work for the benefit of their customers. These decisions taken in ivory towers a long way away from the locality does give banking a terrible name. Of course it does. These things are horrendous. But the actual bankers out in the marketplace working with their customers are completely, in a different part of the ladder to what's gone on in those particular banks. But yes, it doesn't give banking a great name. But I have to say that working in the marketplace over the last few years, we haven't received a lot of flack out in the marketplace for what's happened at the top of some of the banks.
Well, I mean, you mentioned the fact that you locally, with your actual customers, where you are and where you're doing the banking, it might be a different attitude. And if you could, with that hat on and with your chairman of the North East Lincolnshire Chamber of Commerce hat, what is the economy like in Humberside generally, in North East Lincolnshire more specifically?
It's improving. It's slow progress, but the feedback that we've had over probably about the last 18 months, and this is from our customers at Handelsbanken, but also council chamber members that we meet every quarter to get feedback. Things are definitely picking up, and it's been a gradual improvement over the last 18 months, 2 years, that certainly picked up over the last sort of 9-12 months. So yes, things are very definitely improving. Company fortunes are improving, and business owners are far more positive about the outlook than they were, say, 2 or 3 years ago.
And is, just a very specifically a banking question, is credit widely available and easily available in this region?
Yes, far more than it was 2 or 3 years ago. Yeah, it's beginning to sort of loosen up, and you know, we know from sort of feedback that we're getting that businesses are now beginning to get hold of working capital funds they need for expansion and what have you. So yeah, the cogs are beginning to turn a bit more now.
This is usually a political programme, so I must ask you, government policy, when we're going to facing a general election, there's differences in government policy towards the nation's finances. As a responsible banker, what would be your economic and financial policy? I'm giving you power.
Oh, right, okay, to run the country.
Yes, please.
Yeah. I think we need to get away from the times of boom and bust, and I think things need to be stable. We've seen stable interest rates now for some years, and that has helped. We want lending rates to stay relatively low, and even though the signs are that rates will start moving up, possibly this year, even over the next few years, we're not going to see rates probably any higher than sort of 2.75% or thereabouts. So, you know, if I was running the country, it's all about stability. You know, don't spend what you haven't got. Learn the lessons of 6-7 years ago.
Don't spend what you haven't got for a man who's just explained how you can lend money that you haven't got. But I take your point, forgive me. So, and specifically for this region, I mean, we know that we've got money invested in this region very, very quickly. Is that a good thing? Should more pump priming like that be done?
Absolutely. This region, I think, is definitely looking up with the offshore wind power, etc. Certainly, we've seen a lot of new businesses moving into this area. There's the likes of the Able Energy Park, Siemens in Hull. No, I think this is a very good prospect, this area.
Anthony, thank you very much for coming in. I'm very tempted to ask you if I can borrow a fiver, but I'll forbear from that.
Yeah, I'll quote the rate later.
And Anthony Wynne, thank you very much for coming in. That's all we have time for this week, I regret. Please join me next week when we start the election specials. Until then, goodbye.